IRS doesn't want you to know that you are a partner with the government, but if you are a W-2 employee, they are the active partner. And the IRS doesn't want you to become the active partner, because if you are the active partner and you make the decisions, you pay less in taxes.
So can you give me an example of how I would pay less in taxes?
Provide housing, provide a service or a good, and if you're that active partner, you have control over that money. You get to give deductions to yourself so that you're taxed on less money.
What's a common deduction for me?
The audio and the video that you're using to film all of your content, or the travel that you spend money on to go visit all of your different clients.
Is there a limit to how much I can deduct?
As long as it has a business purpose, as long as it's necessary for an income producing activity, you should spend as much money as possible to try and make more money.
Can I do this in QuickBooks myself, or how do I do this?
Every person should know that they are able to do this, but they should consult with their accountant to be able to make sure that they have proper documentation and that all their deductions are legit deductions.
Yeah, so he's definitely not lying about the IRS being that partner in your business, because whatever you end up profiting at the end of the year, you do have to cut a check over to the IRS, no matter what the case may be, unless you show no taxable income, or maybe you have some credits, or you're doing something to essentially offset your income. Now, one of the things he said that I really do like is that if you want to take full advantage of the tax code, you will have to either be a business owner or you're gonna have to invest in some type of real estate. Especially investing in real estate has a ton of tax incentives attached along with it. Now, there's a lot of nuances to the real estate game. One of the things I talk about commonly on this channel is the passive activity loss limitations and the rules associated with that. And there can be a lot of tricks to navigating these passive activity loss limitations. And one of the common mistakes I see is whenever someone first goes out and they start investing in real estate, they think that the depreciation losses that they get from that property are going to automatically offset maybe their W-2 or their other business income. And that's whenever they get hit with the passive activity loss limitations. And so even though there are workarounds to these limitations, real estate is still a great way to invest your money, build a portfolio in a very tax efficient manner, and also gives you great exit strategies for minimizing the overall tax associated with that exit.